a lot of people come and ask me, Pius, what is your philosophy? And I always tell them, we're in the business of increasing the wealth of our clients. And how do we do that? We've, over the 50 plus years that we've been in existence, and I mean NABO, Centum, ICDC, we've gathered a lot of experience, some of it very good experience, some of it very tough experience. And we sort of have some key beacons that we look at whenever we are evaluating opportunities on behalf of our clients. And one of the most important ones, and I would say the number one, is really people. Who are we partnering with? And we've noticed over time that it is important that we partner with people, with investors who are considered to be strategic investors. For example, if you invest in EABL, you are essentially investing alongside Diageo. And Diageo has been in the business of brewing over 100 years. If you've invested in, let's say, Bralirwa in Rwanda, you are investing alongside Heineken. They've been in the business of brewing for over 100 years, and they are likely to continue doing that. And we like to invest alongside strategic investors who are really specialized, because they know what they're doing, and we do not have to roll up our sleeves, leave our investing job and go and rescue a company. So number one is partner. And there are many things I could speak about partners, but in a nutshell, you would rather be, partner is everything, people are everything. You'd rather be in a bad business with the right people than in a good business with the wrong people, because it will still fail, and it will be a very bitter failure. So people is one of the things that we look at. Number two is profit. And I don't mean accounting profit, I mean economic profit. If we put $1 on one side in this black box, what does it come out as on the other side of that box? Is it $1 and 20 pence, or is it 80 pence? There are lots of companies that we have discovered over time, even though they are great brands and they are doing well, they seem to be doing well, they're actually destroying value. They are destroying value because their return on investment, their return on invested capital is less than their cost of capital, or weighted average cost of capital. So we focus a lot on that healthy gap between return on invested capital and weighted average cost of capital. And the companies that have a positive spread always have proven to us over time that they are good places to put our investors' money. So that's number two. Number three is potential. We have learned over time that we can find a good company with very good strategic investors, with very strong operating history of positive economic profit, but you just come in too late. I remember there is one business that we used to invest in. We were major investors in, and it was in the batteries, and it was one of the best cash cow businesses that we were in. And all of a sudden, the Chinese counterfeit batteries filtered into the market, and the investment thesis for that particular business was completely disrupted. So we have learned over time that we should not just be satisfied by the past. We want to invest in companies that have very good future ahead. You remember Kodak, with the introduction of iPhones and other smartphones where you carry the camera. I mean, that business was completely disrupted, but it was once probably one of the largest businesses in the world. So potential is the third thing that we really look at. Number four is price. When a company has a good investment partner, it has good profit, operating good economic profit, it has very good potential. The tendency for investors is to overpay. We don't believe in overpaying, and we also don't believe in underpaying, but we believe in paying a reasonable price so that we can create value for our investors. So, in a nutshell, it's these four things that tend to always be in the background of our evaluation of opportunities. And I like saying this to people, that investment is both an art and a science. There is a lot of attention paid on the science, and people don't tend to see the art. So we tend to use all our senses whenever we are looking for opportunities. And the art part is really where you create opportunities. We don't find opportunity. We create opportunities for our clients. We shape opportunities for our clients and create value for them. So that is what I would consider to be our philosophy, and happy to engage more.